I think most people misunderstand modern banking because we still picture banks the way our parents did. We imagine vaults, cash, tellers, mortgages. Maybe a guy in a suit approving loans somewhere in the background. But if you stripped away the logos and looked at how the biggest financial institutions actually operate now, they'd start looking surprisingly similar to major tech platforms. Think about it. Their apps are designed around engagement. Their notifications are behavior-driven. Their systems track patterns constantly. Their goal isn't just to store money anymore. It's to keep you inside an ecosystem. And to be fair, some of this is genuinely useful. Fraud detection is better than it used to be. Payments are instant. You can send money across the world from your couch. Most people no longer need to take a half day off work just to deal with a banking issue. That's real progress. But there's another side to this transformation that people don't talk about enough. Technology companies learned something a long time ago. Convenience changes behavior faster than intention does. You don't consciously decide to check your phone 80 times a day. The environment slowly trains you to do it. Banking is starting to work the same way. Not because someone is sitting in a dark room trying to manipulate you personally, but because every modern financial app is competing for the same thing every tech company competes for: your attention. Your habits. Your emotional responses. Your predictability. And once you see that, a lot of modern money behavior suddenly makes more sense. Why spending feels frictionless now. Why saving often feels emotionally harder than it should. Why buy now, pay later exploded so quickly. Why people can feel financially stressed while technically earning more than ever before. Because the system around money changed faster than human psychology did. Let's start with something simple. Imagine paying for dinner 20 years ago. You physically handed over cash. Or maybe a card. You saw the money leave your hands. There was a pause. A tiny moment of awareness. Now compare that to tapping your phone against a machine for half a second while already thinking about something else. That tiny reduction in friction matters more than people realize. Behavioral psychologists have studied this for years. The easier an action becomes, the less emotionally visible it feels, and banks know this. Tech companies know this too. Every extra click loses users. Every extra second of friction changes behavior, so modern financial systems are optimized to remove emotional resistance from spending wherever possible. One-click checkout, auto-renew subscriptions, invisible payment systems, instant credit approvals. And again, none of these things are inherently evil. That's important to say. Convenience is not bad, but convenience without awareness can become expensive. Because human beings are incredibly sensitive to short-term emotional relief. You've probably felt this yourself. You have a stressful week at work. You're exhausted. Mentally overloaded. Maybe you've been worrying about rent, deadlines, family expectations, whatever it is. And suddenly spending money doesn't feel like a financial decision anymore. It feels like emotional regulation. You order food because you're tired. You buy something small because you deserve it. You split a payment into installments because future you feels abstract and distant. Modern banking apps understand this psychology extremely well. Not because individual employees are villains, but because data reveals patterns. And today's financial institutions have more behavioral data than banks in history ever had access to. They know when people tend to overspend. They know which notifications increase engagement. They know which colors, rewards, and timing cues trigger responses. Some banking apps even borrow design language directly from social media and gaming. Progress bars, reward animations, personalized nudges, streaks, instant feedback loops. And if that sounds dramatic, just look at how many people now experience money emotionally through apps instead of through reality. Sometimes people feel richer because an app interface feels smooth and optimistic, while their actual financial situation is getting tighter underneath. That disconnect matters. Because technology changes the emotional texture of money. And one of the strangest parts of all this is that banks are no longer competing only against other banks. They're competing against attention ecosystems. A banking app isn't just trying to hold deposits anymore. It's trying to become part of your daily behavioral loop. That's why financial apps now include budgeting insights, spending summaries, investing tabs, cashback rewards, credit score tracking, shopping integrations, AI recommendations, and personalized financial journeys. The goal is to make leaving the ecosystem feel inconvenient. Which again, is exactly how tech companies think. And honestly, this becomes even more interesting when you look at younger generations. A lot of people in their 20s and 30s don't have strong emotional loyalty to banks themselves. They have loyalty to interfaces, to experiences, If an app feels intuitive, fast, calming and personalized, people trust it more, sometimes regardless of the actual financial fundamentals underneath. That's a massive psychological shift, because trust used to come from physical presence. Now trust often comes from design quality. And design can influence behavior in subtle ways people rarely notice in real time. Take investing apps for example. A beautifully designed interface can make volatile financial markets feel strangely casual, almost game-like. Numbers move, charts flash, confetti animations celebrate trades, notifications encourage activity. But money isn't emotionally neutral. When markets fall, people panic. When markets rise, people chase. When uncertainty appears, human beings naturally seek emotional certainty somewhere. Technology accelerates those impulses because technology accelerates feedback. Years ago, most people checked investments occasionally. Now people can monitor every fluctuation every minute of every day, and psychologically, that changes how people experience risk itself. There's actually a concept in behavioral finance called myopic loss aversion. Basically, the more frequently people check investments, the more emotionally reactive they become to short-term losses, meaning technology can unintentionally increase anxiety simply by increasing visibility. You see this everywhere now. People refreshing banking apps late at night, checking portfolios during work meetings, feeling guilty after spending, feeling anxious after saving, feeling behind because social media keeps displaying lifestyles that seem financially effortless. Money has become emotionally ambient. Always present. Always visible. Always updating. And I think that constant exposure quietly changes how people feel about themselves, not just financially. Personally, because when every transaction becomes measurable, every decision can start feeling like a judgment. You spent too much, you didn't save enough. Your net worth should be higher by now. Someone your age is doing better. That emotional pressure builds slowly, especially because modern financial technology often frames optimization as morality. Be more efficient, automate everything. Maximize rewards, monetize idle cash, track every expense. And while some of those habits can absolutely help people, there's also a point where financial self-awareness quietly turns into financial hypervigilance, where people stop using money as a tool for life and start organizing their entire emotional state around numbers on a screen. I think a lot of people are more financially exhausted than they admit, not necessarily because they're responsible, but because modern financial life requires constant cognitive attention, subscriptions, EMIs, insurance renewals, dynamic pricing, credit scores, app alerts, investment decisions, tax apps, digital wallets, auto-pay systems. Your grandparents probably worried about money too. Of course they did, but they weren't interacting with financial systems hundreds of times per week through personalized digital interfaces designed to maximize engagement. That's new, and I think understanding that context matters because it helps explain why so many otherwise intelligent, hardworking people still feel overwhelmed around money. The mindset shift for me came when I stopped viewing modern banking as neutral infrastructure, not dangerous, not evil, just influential. Like social media, useful, powerful, convenient, but also psychologically active. Once you see financial technology that way, your relationship with money changes a little. You stop assuming convenience always equals alignment. You start asking different questions. Does this app help me feel calmer or more reactive? Does this feature support my long-term goals or my short-term impulses? Am I making this purchase consciously, or because the friction disappeared? And weirdly, that awareness alone can reduce a lot of anxiety, because you stop treating every financial mistake like a personal failure. Sometimes you're responding exactly the way highly optimized systems are designed to encourage human beings to respond. That doesn't remove responsibility. But it adds context, and context matters, especially in a world where financial systems increasingly understand human behavior at scale. The people who tend to stay financially grounded long-term usually are not the people who obsess over every optimization trick. They're often the people who build intentional distance between themselves and constant emotional stimulation. They create friction on purpose sometimes. They wait before purchases. They automate savings quietly. They avoid checking investments obsessively. They simplify systems instead of maximizing every possible reward, not because they're lazy, because they understand their own psychology. And honestly, that might become one of the most valuable financial skills of the next decade, not predicting markets, managing attention. So what do you actually do with all this? Probably not something extreme. You don't need to delete every banking app and bury cash in the backyard. But you can start noticing how financial technology affects your emotional state. Pay attention to moments where spending becomes automatic instead of intentional. Notice which notifications create stress. Notice which apps make you compulsively check numbers. Notice whether convenience is helping your life or quietly increasing impulsive behavior. Sometimes the healthiest financial move isn't optimization. It's reducing cognitive noise. Maybe that means fewer financial apps. Maybe it means checking balances less often. Maybe it means separating spending money from long-term savings so you're not emotionally reacting to both every day. And honestly, one of the simplest powerful things people can do now is reintroduce small moments of awareness into financial decisions. A pause before buying. A 24-hour wait before emotional purchases. A monthly review instead of constant monitoring. Tiny amounts of friction can create surprisingly healthy outcomes. Because the goal isn't perfection, the goal is intentionality. Technology will keep getting faster. Financial systems will keep becoming more personalized. AI will probably make modern banking even more predictive over time. That part is coming whether we like it or not. But your awareness still matters. Your habits still matter. And your ability to slow down before reacting emotionally to money might become more valuable than any financial hack on the internet. I think the invisible banking revolution is really about something bigger than banking. It's about what happens when human psychology collides with systems designed for speed, personalization, and constant engagement. And to be clear, we are still incredibly early in this transition. Most people haven't fully processed how different money feels now compared to even 10 or 15 years ago. Not because they're unaware or irresponsible, because the shift happened gradually, quietly. One app update at a time, one convenience feature at a time, one removed friction point at a time. And honestly, I don't think the solution is fear, it's awareness, just understanding that your financial behavior doesn't happen in a vacuum anymore. It happens inside systems specifically engineered to shape behavior efficiently. That realization can actually feel freeing, because once you notice the environment, you stop blaming yourself for every emotional reaction you have inside it. You become a little more patient with yourself. A little more thoughtful. A little less reactive. And over time, those small shifts matter more than people think. Not because they make you perfect with money, but because they help you build a calmer relationship with it. And in a world constantly trying to speed up your decisions, that calmness is valuable. Probably more valuable than most people realize.